Okay, we are live on the... Maybe? Yes, we're live. Oops, it's public. Okay, well, it's going to be public. James, your microphone has not been great lately. I don't know what's going on with it. Yeah, can't hear a single word you're saying. Is it just me or is it anybody else? Ah, there we go. Sorry that it's so hot. Yeah, it's warm here right now in the middle of winter, so. What? You sure about that? Like, you sure? Because right now Phoenix is like 115 degrees. Yeah, Phoenix is 41 Celsius and London is 27. I don't think that that's right. But I will agree that I think it's hot in London. Yeah, there's no way that it's hotter in the UK than Phoenix right now. Phoenix is 40 even yesterday. Unless you caught yeah, yeah, no, man. Phoenix is this is like the hottest part of the year in Phoenix right now. You're not going to beat Phoenix. It's one of the hottest places in the world. There you go. That makes more sense. Either way, I can empathize with you. I know that in the UK, people are not used to crazy high temperatures, and right now it's pretty fucking nuts. So. No, obviously. Freedom units, buddy. Okay, so the market just cranked to the downside. Let's see here. Man, you're... Energy down another 2.5%. There is no buying optimism whatsoever in energy right now. We should be looking to double down if we're currently in some shorts here. I don't know if OX, sorry Callow to say this, I don't know if OXY is the best best chart to short right now, but I think you're on the right track with energy shorts in general. Man, let's see here. I really like the idea of just grabbing like some ETF exposure. Maybe we can look at like Chevron and XOM, but both of these are going to be more expensive now. The puts were cheap 2 weeks ago, but now they're going to be more I've been talking this entire time, not realizing I wasn't holding out my microphone. Anyway, I think that the energy short was and continues to be the right play. Down 2.5%. Fucking crude down 8% on the day. I don't know if OXY is the right short. No offense. I want you to continue to hold that as long as it makes sense and it's not killing you, because you're in the right area of the market shorting right now. But there's other names that are breaking down. OXY is being bought up right now by Berkshire, and so there's just going to be some inherent buying pressure on the chart, on the bid there. It's going to be a consistent buyer. Doesn't mean it can't go down. Just going to, I'm assuming it's going to be harder than looking at something like CVX or XOM. I like the CVX short here actually, but the problem is it's expensive now compared to what it was 2 weeks ago. So I don't know if CVX is the right play here. MRO has a 15% drawdown, but it's currently at $20. I really don't want to short something sub $20. Currently at $20.50. Depending on what the puts are there, I don't know if you're going to want to buy a 15 strike. Let me load up the I think that Berkshire is going to end up owning like a significant portion of OXY. I mean, they already do, but I'm talking like a significant portion. Loading up Thinkorswim really quick, and we'll dive into some of these energy-related names here. For the guys listening to the stream, you're going to listen to me blow my nose. I apologize in advance. Allergies are fucking kicking my ass. Hannah, we tried to tag you a few times today. I'm assuming you were busy, so there's no problem. But did you end up grabbing that Microsoft short yesterday? Congratulations, man. Mike was trying to call you out and give you props earlier. So there's your props from the group. And we, yeah, good job, man. I think you played it beautifully. And then we tied it into a tweet that Lance came out with. I'm going to repost it so you can read it. This process that Lance goes through in this tweet is what you went through end of day yesterday. And so I think it's cool as fuck. Read through this thread when you have time. It's only like 6 tweets or something. But the way that he breaks down how he describes expected value is what we did as a group yesterday when you were talking through Microsoft, right? Where we were looking like, okay, did you miss the original entry? Yes. But what is the expected value? We didn't use those exact words. But what's the risk versus reward entering on the second day drawdown? And the reward was obviously not only the profit target, but the part that most people overlook when you're thinking of EV is what has the risk changed? In what dynamic has the risk changed since the original entry if you missed it? Is it way outside? Has it really greatly skewed the risk to reward against you? For example, let's say Microsoft dropped 5% yesterday. Does it still make sense to enter a short if the stop out area would be 7% away, for example, and your profit target's 3%? Obviously, you wouldn't take that trade, right? But in your case, we looked at the contract value, we looked at where the stop out would be based off of technical analysis, and then your price target, and the EV still made sense. You took the trade. So Lance did a great job at, I used to do this all the time. I don't really do it a lot anymore, but we used to compare trading to poker all the time because there is a direct correlation to being good at poker and having the right tools to be a successful trader. As a matter of fact, prop desks hire directly from the World Series of Poker. I'm sure Robin already knows that, but for everyone that doesn't know that, World Series of Poker bracelet winners get an automatic interview at Susquehanna International Group, which is one of the most successful prop desks / hedge funds in the world. And so they take this shit very seriously. And so to see Lance kind of bounce back into a poker example and talk about trading in terms of EV is awesome. So read through that thread when you can and try to tie in what you did yesterday with Microsoft with the lessons that Lance is talking about and give yourself a pat on the back, man, because it's high-level stuff. It might not seem like high-level shit, but this is what high-level traders do. That's how they think of entering into positions, etc. So, okay, let's look at some energy stuff to the downside. I know that we touched on this a few days ago. It was like this Sunday session. Let's pull up FinViz. I am live right now on YouTube, just so everyone's aware. Let me get the... I don't know if any of you guys want to watch it or not, but I'm going to get the link. How do I even get the link? Man, I'm bad at this. Is this it? Yeah, there it is. James, move your fucking microphone or move your fan away from your microphone. We can't hear anything. It just comes through as like static. Okay, so let's go through FinViz. Energy 50-day lows. Over 1 million, 13 tickers. URL is dropped in Discord. Just want to look at those really quick. Now remember, we're going to look for, specifically we want to look for things that are not at $5 already. We want some meat on the bones left on this trade. Specifically if we're looking to short through puts, we don't want to be buying things that are sub 20 bucks if we have a choice. Excuse me guys, allergies are kicking my ass. CNQ. the name that we had charted on Sunday, is breaking down from a horizontal level rounded top fractal. Price target, current risk on 47.5 to the downside, price target of 44. So there's only a 7% move to the price target. Not generally something we would waste our time on, but for the sake of doing this, let's actually go through the chain, see if there's anything that's even there. We also have a choice to make. Do we short the August or do we short the Septembers? And I think that's going to be a harder play once we find something. There's some volume on the CNQs, but not enough open interest to merit, and at only a 7% spot move with the strikes $5 apart in August. Yeah, there's no play here on CNQ, but the chart sucks. So move on to CPE. Actually, I'm going to post CNQ so you can see it. So everyone can see it. We're looking at this sort of price target here. Just follow the levels to the downside, off of the risk off, down towards the PT is about a 7.5% move. So not worth it. Not something we want to waste our time. Okay, so let's move to CPE. CPE is breaking down this chart. This chart stands out to me because as every other chart was hitting higher highs and or all-time highs in the energy sector, this chart just was range-bound. So for whatever reason, when the market was really allowing energy stocks to go nuts, CPE did not participate. And it looks like we tried to trade this back in 2021. I don't remember ever taking a position in this. Maybe I did. If I did, I would have got stopped out for a break even or a loss here. But since 2021, no real move. We have a rounded top horizontal level break. I'm not really in love with this chart, but let's check the chain to see if there's any opportunity. Let's make a decision as a group right now. Do we want to focus on the August or the Septembers? August are obviously going to be cheaper, but they're going to hamstring us on the time. Cool. Just making sure we're all in agreement here. So CPE doesn't have Septembers, only Octobers. I'm not totally in love with the chart itself. It's kind of a more expensive play. Yeah, so CPE, although it is breaking down, I don't think there's a play here on the chain. So I'm going to skip that. DK. Actually, I'm going to go ahead and post CNQ in the Discord. I didn't draw anything on it. There's not really anything there to draw. You can see what I was looking at. The rounded top with the horizontal level break at 35.5 and realistically 25.39 bottom is the price target. That's not a great looking chart. DK. I think we missed the opportunity to get short at 26.5, currently at 23. At this point, you're hitting PT number 1 off the 26.5 drawdown. So it's already down 17% from our risk level. I'm going to go ahead and extend this level to the right. I didn't have it to the right because we haven't looked at DK in a while. I'm going to go ahead and post this chart inside the Discord so you can see what I was talking about here when it comes to the risk on level. I think we just missed it at the 26.5 pivot to the downside. At this point, we're going to be chasing, and you can see why I'm talking about $23 being your first PT here that we're testing. This area here makes sense in the confines of previous oscillations. This was a resistance. Broken, tested as support, coming down. It's going to be tested as support, right? So you can see I posted it again. There's the PT. Looks like we hit it. So at this point, I think DK is out of the question. No opportunity here for what we're looking to do. And then on top of that, no September contracts available and no liquidity on the chain anyway. So ESTE's sub 20. We're not going to waste our time on that. HES, Hess. This was a name that somebody in here traded. I'm going to remove the P&L chart, but everything else is on. Somebody here traded HES. Not sure. I can't remember if it was profitable or not, but we did hit our price target off of the 116 breakout of 12750. I think this chart is going to be hard. This chart's going to be incredibly hard. I think the risk on level, though, is more or less, I think we just broke down below it today. I would say $99. I have not touched the chart since the last time we have charted this. So you can kind of see the levels that we were looking at on the way up. Somebody traded this and made some cash on the way up. Nobody traded this on the way down, but this is an excellent example of a breakdown off of, I believe this was all-time high, if I'm not mistaken, HES, or is this 52? It was near all-time high. I remember this chart now. So I think we missed the entry at 99, but it's not absolutely terrible. I don't like the argument on the left-hand side of the chart, and I don't like the fact that there's not double-digit profits on the chart easily. So this one is, I'd say probably a B- or a C+ setup, but because we're going through all of them, let's check the chain. And Callow, if you don't mind, obviously, you don't have to if you don't want to, but what is your current, I'm assuming you're down on OXY because you've been holding it for a few days, but what is your current P&L on that OXY percentage-wise? HES, not enough volume to get short. So we're going to move on from HES. KOS sub 20 bucks, not going to waste our time on that. NOV sub 20 bucks. PDCE, I'm just going to go ahead and check the chain before we even chart it because I've never even heard of it before and there's no volume. Rig sub 20. SU Suncor. A little bit of a head and shoulder action going on. Let me check the chain on SU really quick. August has a little bit of volume. So this is an interesting name. Let's talk through SU. So there is some open interest. There is some volume. Not a lot, but there's enough. Grab a contract or two. It's not necessarily expensive either, which is the best part. It's currently trading for 30 bucks. Let's talk through this. Let's run through the entire trade idea routine as a group. Down 16 is actually more, it's better than I thought. So that's okay. You grab September's on that, right? So SU here, let's come up with some PTs based off of and a risk on level. Obviously, we're not going to be using the $34 as our risk on, even though that would have been the best area to attack the chart in my mind. We did miss about $3.50 per share on this short at current price of $30.35, where we have missed about a 10% move to the downside spot price, which sucks. But we can still attack this chart. We just need to come up with a new risk on level. Where are we now going to be attacking this chart? It makes sense right here at around 30.50-ish. Go and draw the new level. But this does represent its own little risk factor here, because where are we wrong now? That's the problem. We do not want a double-digit stop out. That's just stupid. So we do run the risk of potentially having a slightly wider stop than usual. There's the new risk on level that I'm looking at. Makes total sense. Look to the left. You see it as resistance, and then it flipped as support, tested twice. Makes sense to me that this is now the new area that we can use to risk on to the downside below 30.50. Now we need some PTs. From 30.50, we can follow the levels down. I think the first PT is going to be somewhere around 27, which is a 11.5% move. So that fulfills that double-digit profit requirement for us to even look at this. And then sub 27, what are we looking at? Potentially 25.50 for another 5%. Just drawing these over roughly to get these ideas on the chart. And then sub 25, probably somewhere right in the middle at 23.5. This makes sense to me from a level perspective. It makes sense to me from a risk perspective. From current price right now, we're looking at an 11 and 11.5% move to the downside to the 27. Looking at a 15 to 16% move to 25.5, and overall down there at 23.5, we're looking at a 20 to 22% move. So this is well within our wheelhouse of does this pass the sniff test on whether or not we should short. Is there meat on the bones? We're above 20. We have double-digit potential profit here spot. So yeah, we can move forward. Looking at the chain on SU. First off, I guess before we go to the chain, what are we going to look at in terms of a stop out area? Because we want to make sure that from a technical standpoint, this makes sense. So if we're currently below our risk on level, this could potentially be something we enter today, end of day, or it could be something that we enter tomorrow on a potential bounce, right? This does open up the realm of a BRB. We are above 1 RVol at 1.02 with 30 minutes left. There should be a little bit of volume here at the end of day, so this is a BRB candidate. It's up to you whether or not, if you do want exposure in general to energy to the downside, to open it up today, end of day, because we're below the risk on level, or wait for a potential bounce tomorrow and get cheaper contracts. Completely up to you. It is within the realm of a BRB. Where on this SU chart, I'm going to zoom in on current fractal here. Where are we wrong on this idea to the downside? Sure. Yep. So it makes sense to me to wait until tomorrow. I'm not going to influence anybody else's decision, but this does pass the BRB test, right? BRB being, is this an above average volume breakout or breakdown? Yes, it is above. It has more than 1 RVol at 1.02. Like I said, there's still 30 minutes left. So odds are that this should bounce even slightly tomorrow, which means that we're going to be able to grab cheaper contracts. I agree. And that's what I'm going to do. I'm going to wait. For a stop out area, though, let's say we enter tomorrow morning. Where is this trade wrong? Because that's the most important part of this trade in my mind. Because if we would have entered at 34, the stop out area would have been somewhere around 36. We can see that, hey, if we're bouncing back up, we are clearly not breaking down below 34 like we expected. We're out $2 per share to the upside. That's what? Off of a 5% move to the upside. We're wrong. The options contracts are not going to depreciate that much. It's going to be fine. But at 50 area, where are we wrong? Because we're not going to move all the way back up to 34 bucks and say, well, by that time we're wrong, because the contracts are going to be basically down 99%. So we need to pick somewhere on this chart between 30, 50, and 34 to say, okay, we're wrong. Where does it make the most sense? I would say 32 as well. You want to try to defend that? I would say 32 and some change. Why did you choose that? Anybody else want to take a crack at that? 32 or a different one? I'm on your side, Hannah. I'm going to let somebody else before I dive into it. So the reason why I think 32 is the right decision is, yeah, yesterday we bounced there. We found some buyers at that area at 32, and we would expect that if we wanted this 30-50 to act as a risk on zone to the downside, we would not expect for this trade to be right if we bounced and then started to create an uptrend again within this range. We don't want to be holding this to 34. So if we're up near 32 and we're in a position and we close above 32 and a couple pennies, make a reasonable push up there, RSI is tilted to the upside, there's some momentum coming in. At that point, the original trading idea was to play the 30-50 breakdown. It's no longer in play, and therefore we close. So that's why I think the 32 area is the right call. think you're thinking about it the exact right way. But as like we said earlier, we're probably going to want to wait until tomorrow to enter in on these for a pullback. Having said that, let's look at a potential play right now to see if there's anything even available on the chain. So it's at 57 IV. It's not something that you necessarily need to spread, but you absolutely can spread it because we are above 50. It's your call. Open interest, there's plenty of strikes to have over 1,000. Volume is a little bit light, but it's definitely, there's enough there, and it looks like the bid is tight enough to be able to get filled on a smaller position and get a foothold into an energy short. So if we're looking at 27 and then potentially 25.5 and then 23.5 as our price targets, we have realistically an array of strikes that we can be looking to attack depending on how much money we have in our account, and then if we have a preference on delta, which one we would prefer. And I'm looking right now at either the 27 or the 26. I like both of those the most. The 26s have 2,600 open interest, but no volume on the day. They're going to cost you about $1. What is this? $1.10 ish, $1.15, somewhere around there for the September 27th. Or we can go to the 26th rather. Or if you wanted to spread this, it's probably going to be harder to get a spread here because of the lack of volume across the strikes. But let's look at the difference between the 26 and the 25 is a 3-to-1. The 27 and 26 put debit spread is a little less than 3-to-1. So spreads, in my mind, probably not the best bet. Just from a risk to reward standpoint, you're not going to want to go much further below 25, and at that point the 26-25 put debit spreads are going for 3-to-1, which for a sub $1 position already, you might as well open yourself up to the potential of a higher reward on a capitulation move from 30 to 27 and not cap that. So I think tomorrow morning, depending on what energy does, SU is an opportunity for us to get short 27, 26, 25, depending on where the volume is. We had the full trade idea there. Risk on level to the downside, 30.50. Stop out somewhere around 32. Once again, we'll talk through this tomorrow, when or if this does happen. And then we have the strikes and puts available. So there's a full trade idea there for tomorrow morning. Let's see if there's any other opportunities within energy right now besides SU. Also, I do want to look at just potentially buying short either XOP or XLE. So let's look at some of these ETFs really quick. So you have XOP. We have XLE. Remember what XOP is. It's the more volatile industry within XLE. So XOP's ADR is 5.4. XLE's ADR is 4.1, which is incredibly high, by the way. Historically speaking, XLE's ADR is not normally 4.1. So because of what's been going on over the last 16 to 18 months, XLE is obviously being traded a lot more than previously, so the volatility is going to be up. XOP, though, is still more volatile because it has more direct exposure to small and mid caps than XLE does. So depending on what you want more exposure to, XOP or XLE are both an opportunity. Let's go ahead and realistically just look at the chain and see if there's any opportunities here. So XOP, if we're looking at the Septembers, XOP, surprisingly, there's a lack of open interest. This is normally a pretty heavily traded ticker. Let's see if September's just open. No. So there's a surprising lack of open interest on the XOPs right now. 58 IV, which means it's up to you whether or not you want to spread this. You're right there. But because of the cost of XOP, you're probably going to want to spread this, which makes it a little bit harder because volume is not there on XOP. I mean, you got like 25 contracts being traded today. Just a loose number out there. Let's just target the 100, the $100 area on XOP. Just throwing a random number out there. That's what a 10% move to the downside off of a 5.4% ADR. Yeah, okay, that's within the wheelhouse of possibility. Let's try to see if a put debit spread even makes sense. Buy the 100, sell the 99. Gonna get less than a 2-to-1. Buy the 100 and sell like the, I don't know, 95. Yeah. Doesn't really look like there's a whole lot of opportunity for XOP. That's crazy because we traded XOP to the upside a year and a half ago. Oh, yeah, I guess it was a year and a half ago at this point. A year ago. September of 2021. We had XOP positions. So we're going to move on from XOP. The chain just doesn't look like it's going to work with us. We'll go to XLE and see if there's anything there. Lots of volume today, specifically on a few contracts to the put side. These are probably hedges. Got 2,000, 3,000, 3,000, 3,000. The 50, 55, 60, and 65 puts. A little bit cheaper than XOP. Currently trading at 68.50. Next level down is going to be 58. That is a double-digit drop down. So that does, XLE actually looks better than XOP from a short perspective. We could target the $60 or the 55, depending on what we're looking at. $60 are going to run you $2 right now. Wow, that's incredibly cheap for a sector ETF with 66 days till expiration and a 0.23 delta. That is surprisingly cheap. For $1.95, you can get short the energy sector for a $60 put. With a 4.1% ADR, $60 is 11% away from current price-ish. 12% away from current price. That's 3 perfect days to the downside, and you have 66 days to hit that. That makes sense to me, at least within the realm of possibility. We're not so far out of the money that it's just not going to fucking happen. Delta at 0.23 is awesome. This XLE short doesn't seem like that bad of an idea. Actually, it seems better than the SU trade. You can buy the 60, sell the 59 for a 3-to-1. If you did want to spread this, you can get it for 24 cents. Max profit at 76. You can buy the 60 and sell the 55, so you know you're going to be able to get filled because of the volume and open interest on this bitch. 89 cents for a max profit of 4.11. So you're going to get about a 4.25 risk to reward on a spread here. Buy the 60, sell the 55 for September. This isn't a bad idea. For about half off, you can get a spread. Am I missing anything here? Any suggestions on this idea? Because right now it actually looks pretty fucking good. XLE. That's all good. Mike, what's the IVR on XLE here? Because we're still sub 50, but I'm assuming it's pretty high. Okay, that's very high. Holy shit. 83.5 IVR. God damn. So here's a side question. Would this be something that Theta Gang would want to play, even though it's sub 50 IV? Just strictly based on the fact that it's at 83.5. Interesting. On which play? Oh, gotcha. Did you just close it right now as we were talking through this? Okay. Positive, right? Congrats. Cool. Okay. So this XLE position, I'm talking out loud. There's no objections. I think this is the play. I think this is a better play than the SU play. I think this is and there's no high RVOL on this, so there is no potential BRB here within XLE. Normally I don't do this, but I'm going to extend the level out that we looked at previously just so we can get the framing here. Extended that previous consolidation level over because we played that breakout. It was a 24-day horizontal consolidation back in February. That was an opportunity for us to continue to get long XLE, and we did. So here we are back now testing that area. I think this is an opportunity. I like this. I like this short. I like this short down to 60 bucks. So one more time, risk on level to the downside. We can utilize the previous horizontal consolidation at 69, targeting the $60 area. PT, or not PT, a stop somewhere north of 71, maybe 71.5, potentially 72. Targeting 60. September's $60 puts right now going for 192, or you can get a put debit spread, buy the 50 or buy the 60, sell the 55 for $87 and a max profit of 413. So a little over a 4-to-1 risk reward. Okay, everything's written out, or everything is out loud. I think this is better than SU, so I'm gonna go ahead and type this out. $60 puts are going for 190 what? 92. Risk on below 69. I mean, we've been calling it Ron for like a year, so, and you've been here for a year. So why is this the first time we're learning about this? I don't know who I stole that term from. I definitely didn't come up with it by myself, but it makes sense. So let me continue to call it that. By the way, we're live on YouTube, just so you know. Okay, so XLE there, trading opportunity. Trading opportunity to the downside within the energy sector available. Okay. Crude is now down 8.12% on the day, pressing into previous support. I'm going to go ahead and post the chart in Discord really quick. We've given Mike props, but I want to give him props live on YouTube if anybody else is watching this in the future. Mike did call that ascending trend line prior to the breakdown and said we should look at this. This is a trend line that's been here since the beginning of January, middle of January. If we break this, at the very minimum, it's a change of attitude within crude. And so we drew the line, excuse me, and maybe 3 or 4 days later, we violently broke below it on July 5th, that Tuesday trading session. Then we got the bounce back up towards that ascending trend line, and it's acted as resistance. We're right back down to support level at 95, 96, that we've now tested 1, 2, 3, 4, 5, 6 times. And the more a level gets tested, the weaker it inherently becomes. So yeah, I think these XLE shorts are ripe and ready. XLE itself has an opportunity, the actual ETF. Yeah. So right now it's moving really well, 4.1 ADR. As a matter of fact, the look at this. XLE has a higher ADR than CVX right now. When's the last time you saw a fucking sector ETF trade more volatile than the names inside of it? So XOM is 3.9 ADR, CVX is 3.6. And XLE right now is 4.1. So yeah, I think XLE is the easiest for broad-based exposure to the downside. Shout out Hanno for grabbing that Microsoft short earlier yesterday, or not earlier, but end of day yesterday. That's awesome. A bunch of us are still short some semiconductor names. Pull that up really quick. Semiconductors still look like hot trash, unable to place a higher high. Continue to hold those semiconductor shorts. Let's see what intraday healthcare was the only name that was hitting 50-day highs today, and it looks like it's drawing down. Biotech in particular. We're going to look at biotech really quick. 14 minutes. So biotech we've been talking about for weeks now, showing relative strength across the market, up around 1% on the day. Everything else is down, basically. We have equal weight consumer discretionary with a minor pop today, but everything for the most part, sector and industry-wise, is red. XBI is not. That's fucking strange. We understand that that's strange. We're looking at it. ARC, by the way, is up today, 0.71%. So there's something going on. I know that we've said this before. I don't need to sit here and continue to convince you guys, but there's something going on with some of the riskier parts of the market. They are not drawing down as bad as the overall market. That doesn't necessarily mean that these are winning trades. It does mean, though, that there is some sort of attitude shift going on. As it manifests itself into a longer-term trend, we are right at the cusp of the beginning of it, so we don't know yet. But XBI up right now, 0.95%, 0.99% on the day when everything else is down. Marcos, who is visiting family this week, so he's not going to be on very often, is in one or two different biotech names. Is anybody else in a biotech name? Most of these are going to be equities trades. I still have my long-dated BMY play, which I'm down on. But yeah, Merck is nearing an all-time high. Eli Lilly is nearing an all-time high. Eli Lilly actually a little bit of a dump today, 2%. But there's some quality stuff going on within healthcare in general. CI being CI hit an all-time high today again. It's currently down 0.27, but we did hit Cigna hit an all-time high today. So Cigna is really the one that's been performing the best over the last few weeks. Up 16% on an $88 billion market cap company, hitting into all-time highs. Probably something we should be paying attention to. Just to refresh my memory, going over back to CI, looking at the Septembers, it's very thinly traded. That's the one thing we don't like. Oops, I was looking at the puts. A shit ton of volume on the 300s, actually. So Marcos was looking at a 320 price target. So I think he was actually looking at the Octobers because, excuse me, 320 is pretty far out there. But right now, the Septembers just got bought up today. It's a 33% IV, so you don't need to spread it, but it is expensive, so you're probably going to spread it. I would spread this. I'm not going to pay $900 for a contract. Let's see here. Generally, your brokerage takes care of it. Yeah. Post the chart. I do not think that you should buy options on anything leveraged. You're already leveraging everything through fucking derivatives. Like, there's no point in buying like leveraged fucking financial instruments on top of a leveraged ETF. In my mind, it's like opening up an incredible amount of risk for no reason. You can buy the equity within that, but generally speaking, just so everyone's fully aware, there is decay on leveraged inverse leveraged ETFs and stuff. So like generally those are used for day traders. If you want to go ahead and incur the decay, yeah, you don't want to hold these more than, you don't want to hold these overnight. Realistically, there are times where the decay is offset by the potential gain, and so sometimes swing traders will use them, but more often than not, you're gonna lose even if you win because of the decay on some of these leveraged fucking ETFs. So don't do it. Great to use as day traders though. Fantastic. Yeah, it's like that. It be like that, dude. Not something I want to do. XBI is up over 1 RVOL. 9 minutes left. Up 1.35%. Looks like we're ramping end of day into biotech. So you're doing yourself a disservice if you're not, at the very minimum, looking for opportunities to get long in biotech. I know that right now the market seems like it's uninvestable, untradeable. It's not. You can definitely find spots. You don't need to go all in, right? You don't need to become a millionaire tomorrow, trust me, but throw your capital into spots in the market that are currently working and see what ends up happening. You might find yourself on the right end of an amazing trade in the next few weeks here. So biotech right now, 50-day highs. We got 7 names. 7 names, or healthcare at least. That's funny. So we've gone through these a lot, but here's a few more. SELB. Look at, like, every single one of these fucking biotech names looks the exact same, right? We're getting like the rounded bottom. We're carving out the rounded bottom, and then we're just fucking launching off. CRISPR. Here's a name that we looked at potentially trading. I don't think anybody took this because we missed the original entry. Ironically, today could have been an entry. Feels bad. I wasn't here though. Let's see what else. Here's one right now. We were looking at this as a potential entry, and today's it on low volume. So do not expect a BRB. I believe when we checked the chain on this, there was no real opportunity. I'm going to double check that. 87% IV. Going to have to spread it. Surprisingly, there's a lack of strikes, which I guess is good. Gamma squeeze this bitch. There's a lack of open interest on the 40 and the 42.5. Hang on, let me double check this because that was a little ridiculous. You could buy the 40 and sell the 42.5. It'll cost you $30 for a max profit of 220. Oh my god, that's like a 7 or 8 to 1. I don't think that this is a good idea, but there's only 40 open interest on the 40s and 103 open interest on the 42.5s for October. Oh shit, those are Octobers. $32.5, $35. It's a double. So VIR though is breaking above our risk on level at around $30. So we're currently at 30.76 with an ADR of 5.9. We have not even hit ADR. It's a low volume. Opportunity here to grab some shares is probably going to be a shares trade. Opportunity to grab some shares in a biotech name if you do not have any exposure to healthcare or biotech and you want to get something going. You don't have to buy a lot. Buy, 1/5 your normal position. Yeah, I had a biotech name too when I opened up Robinhood. I don't remember what they fucking were now though.
Yeah.
So VIR is there. Oh, look, that's the name that Marcos is in. Marcos is in VIR. He got in at 26.75. And it's... See, even equities can be sexy, man. This is up 15.5% since his entry. Look at that. No idea what this is eventually going to do. But biotech still is now up 1.69% heading into the end of day. So I think tomorrow on lock we have an energy short. I think we should play that. Put that on. Put that on and see what happens. End of day looks like we are a little bit of some buy volume coming in. SPY bounced 10-15 minutes ago, 0.5%. Q's bounced along with it. Got 4 minutes. Anybody have any questions? Any specific charts you want to look at? Trade ideas, etc.? Yes, sir. No, you're right. Normally, what the brokerage does is the brokerage takes those shares and then immediately sells them and gives you the difference. Are you talking about spreads? Sure. Goodbye, stream. Shutting this